Hey people, welcome to the first ever video of level 2. I'm excited to bring a level 2 video because I was getting bored of making level 1 videos. So in this video, let's talk about different investing styles. Um, so before I go into this, I want to ask you, what is your favorite food? Um, like if somebody were to ask me this question, I would say hands down biryani. Nothing else in the world is going to beat biryani. But I'm pretty sure if I ask somebody else, they're going to say pizza or hamburger. If I ask a third person, they're going to say both of you are wrong. It is definitely pasta. You have no idea what you're talking about. So this is exactly how the investment styles are. What some people may like, the other may not like. There is no right or wrong method. I would say you have to try everything to figure out what you want or what suits best to your lifestyle and to your temperament. For me personally, I have tried everything. So there is value investing, there is trading on technicals, and then there's trading on emotions, and then there is stock market options, which is a whole different ball game. Um, Value investing is more like, you sometimes want to buy, let's say, a new TV or a new toaster or something. And then you know that there is going to be a Thanksgiving sale in November, or there's a Diwali sale or Prime Day or something. And you wait till that happens. That is exactly value investing. Uh, it's a very boring process. But it's something that's very profitable. Most of the time, you're doing nothing. You're just putting your money in an FD or CD or bond, and then you're just waiting for something to happen. When something becomes cheap, you go and buy it. How do you define cheap and what exactly is the cheap stock? I will explain in a while. But that is value investing. So when something becomes cheap, you go buy hordes of it with all the money you have kept so far, like you go all in, and then you just wait again, do nothing for a long period till the bet works out. um, Trading on TA. Oh, one more thing about value investing. Somehow, this method, though, is the most profitable. I feel it gets the least rap on YouTube or Instagram or whatever. But people who know, of course. I think it gets the least rap because, like I said, it's very boring. Like you just buy something, you have to wait to buy, and then you again have to wait sometimes years to sell. It's not a very very encouraging or very interesting thing, but this suits very good for people who have a day job and you cannot invest too much time in monitoring graphs and all these type of things. Then this is your thing to go. uh, Value investing has been around for a very long time. The most popular value investors that the world knows today are Buffett and Charlie Munger. One of them is 92 and one of them is 99. So they've been doing it for almost a century, and they've been very successful at it, converting almost nothing to billions of dollars. But even before that, there were people like Benjamin Graham and Peter Lynch and a lot of others. There are solid books out there on the fundamentals of value investing. All of these principles hold today even. And the 100-year history is a long thing. Like today, you may not realize what it is. Like today, a lot of stock trading is happening on did Elon Musk tweet this or Dogecoin or Bitcoin or some things like this. But when you take 100-year history, America has seen 1929, the Great Depression. Everybody's losing jobs. All the businesses were closing down. 2000, the dot-com bust. Where suddenly all the stocks started falling. All these have, of course, very well defined reasons. I'm just giving you highlights. 2008 housing crisis, most recently 2020 COVID crisis, and then now currently we are going through an artificial banking crisis because of the higher interest rates which the Fed is trying to regulate. Um, you don't have to know exactly what all these things are. I'm just trying to say a lot has happened in the world in 100 years, and these people have successfully managed to make money using this method. It's the most underrated method, the most profitable method, the one that's least talked about, but the ones that there are a lot of books on, which if you read, you can easily make money out of this. Um, the next thing is trading on TA. TA is basically technical analysis. Um, again, I'm not against one method or the other. I'm simply, this is like asking your favorite food. Everybody has a different opinion and there's no right or wrong answer. But I'm just telling from my personal experience what I feel. So TA, technical analysis, is basically looking at all kinds of fancy graphs. So you see moving averages, you see Bollinger Bands, you see candlesticks, you see Fibonacci levels. There are a lot of things, and you try to make an assessment whether this stock is going to go up, is it going to come down, what to buy, what to sell, etc. For some reason, this method is getting a lot of rap on YouTube these days, and this is also confusing the investors, beginner investors for sure, because they think that buying a stock, it means looking at a graph. And it is not true at all. You don't even have to know anything about charting to make money from the stock market. But somehow it is what it is. So, but if it is your thing, and if you think there are consistent ways to make profit, and if you have made profits, sure, if that's the thing, go for it. The third one is trading based on emotions. Um, I have already spoken a bit about emotions in a previous video. I'll leave the link down so you can go and check that if you want. But emotions is also very profitable. So I was able to trade in the COVID crisis, and currently I'm trading in the banking crisis. The COVID crisis, I think I made some like 20% or something from 2020 to 2021. It was not a lot because that was a particularly hard period for me. Like I got laid off, and then there's no job, there's no money, and then you don't have enough to play with these kind of things. But the current banking crisis, I'm invested, and some things are paid off, some things not yet. But it is a way to do it. So basically, when everything is falling, you go out and look for opportunities, and you buy what you want. Um, and the last one is options. So options is a very complex field. I would say this is suitable only for the very strong hearted. Like if you can see minus 50% return in one day and still not lose your sleep that day, only then come into this. And this is just in one day. Like one day it will be plus 10%, next day it is minus 50%, third day it can become minus 100%. We don't know. So if you can handle this type of a thing, only then come into options. And if you are a person who has a little more time to do the research and to understand what options are, because the game of options is completely different from the stock market. The rules are different, the theories are different. So if you have time to learn about those things, only then come into the options world. So let me, of course, now I've explained the methods, and then you will ask, okay, now I don't know, what do I do? So let me give you some idea of the percentages I have made using these different methods so that you can make a judgment for yourself. So the value investing method, the most recent one I tried was in Amazon. Like 3 months back, the stock fell a lot because they announced that their sales are slowing because after COVID, interest rates has hiked and they're not able to pick up the sales. But then I think I bought at 93 or something like that. And if you look at the current price of Amazon, that is a 37% up. And this is within like 3 or 4 months. Another value investing trade I did in the past was Netflix. So July 6, 2020, the Netflix stock price was around 180, 183. It happened because there was a sudden news that they're not able to add new subscribers and they were trying to do some password crackdown. And then they were trying to build a new model for ad. Like they were trying to go into 2 tiers or something like that. And the investors got freaked out. They're like, oh, these people are not going to make money. Let me just sell stocks. But then I entered at 180. And then I think within a year or something, I sold it at 340. Right now it is 400 plus. So that's definitely like 100% trade there. I sold for different reasons because I found some better things to buy and I wanted to move money or something. So yeah, that was definitely 100% return. Trading on emotions during the COVID, I was able to make 20%. Again, because of my layoff and lack of consistent income, I was not able to do much that year. But with whatever I had, I could make do, and this is what happened. And then options. So options, I was able to make 100% sometime in the past. And this is not like one trade with 100%, but small, consistent bets using some strategies that you get 100%. But then if you take not by percent, by value, like the amount, like in one method you would have got $100, in another method you would have got just $1, even though the percentage might say it. So that way, value investing and emotions have given me the most returns in the past. The options, even though the percentages, you might think like 100%, let's all just go into options, like forget this whole stock thing. But the thing is, in options, you also lose 100% money. And so you have to be very careful of the risk. You have to know exactly what you're doing. And even if you know everything, there is a very high chance that you lose money. So I could never put like a very large amount into options. But I still do like very small amounts as and when my time permits because of my busy job. I still do something here and there. And yeah, so in total, like over the years, I've been able to, I think this year, my 1 year return is like 45%, and the year to date is 50% plus something. This is definitely higher than the index, right? So I'm not trying to brag. I'm just trying to tell you there are methods which anybody can learn, and you can do it yourself. You need a strong heart. You need the discipline to learn things. And you need to do things the right way without getting without being tempted about these get rich quick schemes or do one day this, one day that type of a thing. Um, I also want to talk about some of my failures because after hearing this video, some of you might think, okay, there is, if you're an Indian investor, you might think there's Adani Enterprises there, it's going way down. Let me just buy Adani. So I have to talk about my failures too. So I tried to trade on the banking crisis on First Republic. I lost apparently 5 to 10% of my portfolio, but I had bought some puts to hedge some of my losses, but it was definitely still a net loss. And then um, uh, but I did make other banking bets too. Like I bought Charles Schwab, I bought Capital One, I bought a few other things. So if you take the net, it is definitely way higher. And even like if you compute the total, like minus the losses and do everything, the net profit is still way higher, and it is definitely a good return. Um, why I wanted to warn you about Adani Enterprises is it is a very high debt company. So we do not know what exactly the future holds. I'm aware that the PM supports Adani and he will try to break up this company. And somebody might think it's a good investment to buy, but I would personally stay away from it because of the high debt. I have also tried the value investing on Indian stocks. So I've chosen some pharma stocks in the last 3-4 months. I chose pharma because of high interest rates, and that particular sector is a little more resilient to high interest rates. So I chose like Cipla, Divi's Labs, and then one more, I forget the name. So all of these have given like 10 to 17% returns in 3-4 months. I've also chosen some banking stocks in India simply because they were cheap. And I think the most recent thing I bought was Karnataka Bank, and it went up like I think 22% today in 1 month or something like that. Whatever I say here, I'm not authorized or licensed financial advisor or something like that. I'm simply telling you what I did. I'm not asking you to do the same things. It will not even work if you do the same things, because more than buying the stock, you have to know when to buy it. Like I bought Amazon when it was 93. Today it is 130. If you buy today, I cannot tell you for sure how much return you'll make. So please don't go about like simply copying the names I say or something like that. I'm trying to bring methods where you think for yourself. I'm not giving you fish to eat. I'm teaching you how to fish. And probably, somehow you're benefited and you make good returns too. I will make a part 2 of this video. So like I said, there are many investing styles. I cannot tell you which to choose. You have to figure it out for yourself. But I can tell you some things which won't work for sure. That will be my part 2. Stay tuned.